Hello everybody, this is Max Farrell from DexTrader.com, and this is the 5-minute trading WB system. We're in this video, which is trading with flow and using the rules to trade 5-minute trades. Now, in previous videos, you've seen what the WB system is and how it sort of operates. Now we're going to work on the trading flow and how to use that system. Before we get started, the reason why a flow needs to happen in this condition of using 5-minute trades is that we're not looking to go after every single signal. As you see in the systems themselves, there's a lot of signals per hour. There could be 12 signals in a particular hour per each pair, and there's 7 pairs. That's a tremendous amount of opportunity, but we don't need to go after every single one. Now, in order to justify simplifying and lowering the amount of trades we go after, we apply this algorithm. Now, you've probably seen this algorithm around. If you've done any other training with me, if you've done our Nadex Ninja system or what have you, you would have seen this particular algorithm. It's C plus V equals G. That means that if I decide that I'm going to trade one contract a piece on Nadex, and I'm going to win an average of $30 every time that I trade that, and I trade this, say, 5 times a week, that doesn't seem like a lot of money, right? That only comes out to be about $150 per week, you see? So if I have a 95% success rate, which the system does when you follow the flow and you really train hard, my success rate's about 95%, 90 to 95%. So even if I do lose one, okay, out of every 10, I'm still way above the game here, okay? So let's just say that we're able to average out to 5 wins a week, and we get this to $150 a week. This $150 a week is all based off of one contract at a time. How do I get to $300 a week? I don't need to trade more times a week. I just need to increase my consistency of contracts. So now I just have to do 2 contracts to get to 300. Because I want to consistently play the market and work it well enough to get to 5 or 6 really strong trades a week. That's all I really need to get to 300. Why? Because what happens if I decide that I want to trade 10 contracts at a time every single time? I'm making $300 every time I trade. But also keep in mind, when you lose, you'll be losing a large amount on the other side. And we'll talk about risk to reward as well as how to compensate yourself through the process. Now that you know what consistency plus volume equals goal means and what it really does is to get to that goal, how do we get to consistency? And in that march to get to consistency, we have to apply another part of the algorithm, which is P and D, which is patience and discipline. And that makes P plus D equals C plus V equals G. I know, it's a funny little algorithm, but this really does work. The meaning of this is patience is the act of waiting for something to happen, and the discipline is doing the right thing once it does. Now, before we get started, me showing what the flow is, I need to let you know that 5 minutes are fast. I mean real fast, okay? You can't come in on minute 1 and see an arrow and just get to your computer and be like, all right, let me try to see if there's the flow. Let me see if I get the flow from here. You're going to be too late. You need to know the flow prior to, and then the arrow comes out, the arrow that you need it to be, and know that that's the arrow once it hits. So you need to analyze the market before that arrow comes out and then just be able to go for it. You can't be analyzing the market as the arrow just comes out. So you have to get a pacing, if you will, okay? Also, trading 5 minutes with this flow is subjective to your point of view, okay? One person may see a trend be a down, and they may overlook the fact that it got broke right here just a little bit. And so they may decide that, you know, this is something I'm not going to get into, where somebody else might see that same trend as being okay to do and get into the trade. So it really is subjective to you, but you just need to apply as many of these flow opportunities as possible and these rules to each and every trade you do, okay? And they're only made on the ability that you can see clearly and make the rule each and every time. If you see that trade happen and it does bust, and you do it, and you end up not doing the trade, the next time it happens, don't do the trade either. Okay, so don't just change the rules as you go. Let me see what happens this time. Anytime you say, let me see what happens, you're not trading, you're guessing. So let's talk about the flow. In this video today, we're going to really just kind of go through these really quickly, and each one of these is going to get its own little video on how to apply it. And of course, you'll be able to see some other things as you go along. But let's just go down this quick checklist. Spotting the trend. This is something is also, like I said before, subjective, and is very artistic, but there are certain rules. A trend is a value of higher highs and lower lows applying to a trend for an uptrend. And just like the reverse, lower highs and lower lows happen in that fashion to be considered a downtrend. Now, in some cases, is this a downtrend? The answer is yes. Overall, from beginning to end, you can't just look at it and say, okay, it's a downtrend. You have to look at all the dynamic parts of the trend. Now, in a trend, there's a couple different parts. There's three major ones, right? There's continuance, which means that you have, in a downtrend, a lower high and a lower low as it continues on. Okay? So if the trend is heading down, this part of the price heading downwards is continuance. When it reverses in the opposite direction, okay, this is referred to as pullback. Okay, we'll go into much more detail later. And these areas of movement of continuance and pullback make our trend what it is. And so if we see that we get a piece of the pullback that breaks that continuation of trend, this is something that I kind of pull away from, right? And I try not to look at those particular ones. So you have to learn how to spot the trend as it moves on. There is also a process called consolidation that happens, that when prices reach certain levels, that it just stays at those levels and doesn't really continue on in one way or another. So being able to spot no trend at all is just as important to be able to spot a trend. Support and resistance, number 2. And checking support and resistance level. As price moves throughout a day or a week or a month, it doesn't really matter what it is, there are usually sometimes price levels that happen at certain periods of time, as well as certain levels. So this particular level would be something that a price would gravitate to. When the price action is below the support level, or below a level, okay, they refer to this as resistance. Okay, and when it is above it, it's referred to as support. Now, can the same line change from support to resistance? Absolutely. Once the price gravitates past that line, it now goes from a support to a resistance level. And the same is true once it goes back above it. So every time that the price goes above or below, that line can change to its category of support or resistance. Now, the more times a pair hits that line, sort of the weaker it gets to a degree, okay? We find that support and resistance are always tested after immersion. So if it comes down, 9 times out of 10, it's going to try to come back up just for a moment, even if it's just for maybe a couple of bars, maybe come up and touch it, and then it continues on. So it's very important to know where you sit at with learning how to read support and resistance. The videos that we're going to be doing on support and resistance are very entailed. Okay? Once we set that line, our number 3 level here, or flow, for part of the flow, is obtain price level. If we get an arrow, as we depict that this is a downtrend, and we have a couple of up arrows happen, and then all of a sudden we get a down arrow, the first down arrow after some of our pullbacks depicting on a trend going down is usually the best arrow to get into, right? This is the one that's is muy bueno right there, right? But at what price do we use? Finding that price is really subjective on either the tip of the arrow, depending on a few other things, support and resistance. If support was here and it's underneath, so now it's considered resistance, and the price is underneath, this tells me that there's a ceiling here that it could bounce off of. If it was actually in the opposite and support was down here and it was above it, I'd probably stay away from this trade. But again, these are all just little tiny rules. As we go along, you'll learn how to apply this. Being able to apply the right price and the right level of price is very important. Once we do that, we have to learn how to apply that to the indicative price on Nadex. And what do I mean by that? Well, we use on our WB system what we call spot Forex pricing. And this means that a single price on our system, okay, this is our system, our spot price, on Nadex would look something like this. Okay? And maybe you have another one, so this would be sort of like that. Okay? So it's usually between 1 to 1.5 pips different. On Nadex, it's always going to be higher. Why? Because Nadex takes the last 15 prices, or the last 25 prices, and it takes out, if you have all these prices here, and it takes out an average of the middle 15, right? So if this was 25 prices, it take out the middle 15 and give me a price that looks like this, okay? Now, we may be sitting here on our WB system, but Nadex uses an indicative pricing format that does just this, okay? So we have to kind of keep that in mind. And I know it seems a little bit confusing, but once you get into the system and really start working it, and through the other videos, you'll see what I mean more as we build upon this. Number 5, set the market price on Nadex, either a working order or a market price. On Nadex itself, there is a market price, what we refer to as the market price, which the pair is available for, right? Because remember, in Nadex, it has to equal $100 overall, okay? So if the market price is set at $35 on either a bid side, which is the sell side, or the offer side, which is the buy side, okay, it would be 65 over here. Or within reason, you would have a bid-ask spread, so it'd be like 34 here and maybe 64 here, or something like that. And whatever's the difference between, it doesn't really matter at the point. But what we're saying is that market price is what the profit margin is available on the solution, right? So if I'm going after a sell trade and I'm looking at $35 on the market price, that's the contract price is available for $30 profit, okay? On the buy side, that would be $65, right? So I want to be at least $35 or $30 in profit. When I put the working order on, or I go right at the price, we want to be at a certain price and above. I always try to be above $30 on my profit margin for every contract that I do. And there's a couple of reasons why that we do this, is because I want to keep a certain in the money ratio, risk to reward ratio. We're already in upside down on risk to reward, so I want to make it as low as possible. But I want to make as much as I can without being what we refer to as at the money or OTM, or out of the monies. Okay? And this will become more clear in the video for learning how to use the market price and that value. Now, the last two ones are really important as well. And number 6, select the amount of contracts on incremental crawl. We have this process that we refer to as the incremental crawl because there is a set of emotion that happens when we trade, and it's always about money, okay? When we lose, we become unhappy and we get sloppy, or we try to revenge trade. We try to add more contracts to make more money because we think that, oh, I just lost 2 in a row. I can't lose a third because the system's so good, whatever, okay? You get this emotion that puts in, and emotion it should never be driven by money, okay? And this is where a lot of traders fail at, is because they use emotion to think that they can get ahead by making these quick, cut corner deals, right? oh, I just got in. Let me put 5 contracts on this one because I just lost 4 contracts. And if I do 5, then I'll be above and I'll be in the game. Then I'll be on the right way again, right? And the answer is no. You don't do this. We create this process called the incremental crawl where everybody starts out trading 1 contract, okay? And as your win ratio begins consistent, and remember, we don't trade live at all until you're absolutely 100% ready, okay? And that means that your consistency level has to be there, okay? Because remember, we don't do anything by adding volume onto contracts until what? Until we get to consistency, right? That's why I talked about consistency plus volume equals goal in the very beginning. The concept here too for doing 1 contract in the very beginning is this to set yourself a pace, okay? So let's just say you trade 1 contract and your incremental crawl is set. We'll talk about this more in the actual video for it. Let's just say that, you know, every $300 or $600, let's just say $300, you want to be able to increase 1 contract. And this is what you do. You set yourself a level of goal at that point. So if I'm trading 1 contract and I'm winning an average of $30 per contract, I have to win 10 contracts or 10 trades to get to that 300 in order to go to 2, right? So I would have to win 10 trades. Well, if my level is still every $300, I want to raise up 1, okay? That means now I only need to trade 5 trades to win at $30 of profit to get to my 300. You see where this is going? And then 3 and 4 and 5 and 6 and 7 and however many from that point. To where when I finally get to 10 contracts, I don't really want to raise above more than 10 contracts at a time. That's a pretty big high level. And even myself as a professional trader, I don't even trade more than 10 contracts at a time at any one time. I don't take any chances past that level. Not yet. I may in the future, but as of right now, I don't. So setting your incremental crawl is very important. Well, like I said, we'll go into great detail on that. And lastly, keeping records, which means using a journal. And if some of you are already like, yeah, but I got my account system to tell me if I'm winning or losing. And the answer is no. It's part of the flow. It slows you down. It makes you pay attention to what you're doing. It lets you keep notes. It lets you track your successes and your mistakes at a level that you're able to follow. And we can take that information and use that for many, many, many more months and help other people as well. Now, remember, the flow is important because it gives you the best chance to make the right decision and create rules that we can follow and remove the emotion from the trade. It will also help you see the action of the pairs during times you can trade. You know, sometimes the flow works very, very well on the Euro USD, but may not work as well on the Audi USD at certain times. We don't know what that is. This is where all the parts of the flow will help you learn what to do with each pair. In the next several videos, we're going to go over the flow. We're going to break it all down to all those different segments and also the different angles of the trade that'll happen. You should also have access to the Trading with Max playlist from YouTube, and that can help show you how I do it, because I do it live through the trade system, and I show you where my, I get into my trades and how I pick the price and all that kind of good stuff. So you'll really see it happening in action. There's only so much you can watch in videos, and there's only so much that you can listen to in a setting like it is right now. You got to get in there and do it and just start working the process. But when you do it, you have to follow the flow precisely. I want to thank you for your time. I look forward to seeing you in next videos and love to see your success. I'm Max Farrow. This is Dex Trader. And as always, trade well.